In the world of the 99%, high income is equated with wealth. In the machine-like grind, we know that income is simply fuel intake. If your engine is inefficient, you can pour in $1 million of fuel and still end up stranded on the side of the road. This is the high-income broke trap. It is a state where your operational costs rise in lockstep with your revenue, leaving your net worth static. To reach the 1%, you must decouple your lifestyle from your earnings. You must move from earning for consumption to engineering for impact. We are going to analyze the structural flaws that keep high earners broke and install the wealth accumulation protocol. The first principle is lifestyle creep as systemic failure. For most professionals, a raise in salary is immediately followed by a software update in their lifestyle. A bigger house, a faster car, a more expensive social circle. This is a dead-end loop. You are increasing the weight of the machine at the same rate you are increasing the power. The architect treats every increase in income as pure investment capital. You maintain your baseline burn rate and route 100% of the delta into productive assets. You don't buy the symbols of success until your passive yield can pay for them twice. The second principle is the tax of active labor. High earners often pay the highest percentage of their income in taxes because they are selling their time. Time is the most heavily taxed resource in the world. To escape this, you must shift your income from active to equity-based or passive. This is the tax shield of the 1%. By owning businesses or assets instead of just receiving a paycheck, you gain access to the legal architecture that protects your capital. You stop being a tax generator and start being a wealth builder. You are moving your labor from a high-friction zone to a low-friction zone. The third principle is the illusion of security. Many high earners feel safe because their monthly intake is large. This is fragility disguised as strength. If that one source of income, whether it's a high-paying job or a single business, fails, the entire machine collapses. The architect builds redundancy. You use your high income to seed multiple independent revenue nodes. You aren't looking for one big win, you are looking for systemic resilience. You want a machine that functions whether you are in the cockpit or not. The psychology of the 1% in this domain is one of net worth obsession. They don't care about their gross income, they care about their retained equity. They find no pride in a high-spending life if it doesn't lead to a sovereign future. They are financial sculptors. They see their income as raw material that must be carved into a permanent monument of wealth. They have the discipline to live like they are broke while they are building their empire. To execute the income protocol, you must perform a retention audit. Calculate what percentage of your income you actually kept last year. If it is less than 30%, your machine is leaking. Set a hard retention target for the next quarter. Every dollar that enters the machine must be assigned a task before it can be spent. You are no longer making money, you are acquiring freedom. High income is a tool, not a destination. Use it to build the machine, or you will spend your life fueling someone else's. Audit the retention, shift the labor, build the redundancy. The machine is now engineered for impact. If you are ready to break the high-income broke cycle, subscribe. The Wealth Architecture series is your blueprint for the 1%. We will see you in the next deep dive.